Andre, thanks very much for your time. Again, you indicated today that North America is a key growth engine for this group into the future, and you're going to become the largest foreign direct investor soon into the state of Louisiana. What are you planning in that area?
We're planning essentially 3 projects. The first one is an ethane cracker and downstream ethylene derivatives, including polymer plants, alcohol plants, tetramerization that goes into co-monomers, and also MEG facilities. This will have a price tag of between 5 and 7 billion US dollars. We expect to have that up and running around about 2017. So that's quite an aggressive and ambitious target. Then we're also pursuing 2 GTL plants, each with a capacity of 96,000 barrels of product per day. In addition to the GTL facilities, we will also be extracting value-added products, waxes, base oils, and also paraffins for LAB manufacture. These will be put into commission slightly later, probably around about 2020 to 2021. Price tag for that will be between 11 and 14 billion.
And this is all happening in an area called Lake Charles. Where is Lake Charles?
Lake Charles is almost right on the border between Louisiana and Texas, so it's in the western part of Louisiana. It's very favorably situated with regard to infrastructure, lots of pipelines, shipping channels, ports, and of course a highly qualified labor force that we aim to tap into.
And you also feel that there's no problem with the fact that US is moving towards energy independence. They're having a much more crude oil production there, because those aren't really the products that you are going to be producing.
Correct. I think many people have always thought that somehow we will be impacted by the glut of cheap, high quality crude oil that is currently produced in the US. If you look at some of the stranded crudes that are produced in the midwestern part of the US, prices have gone down as low as $55 a barrel. This, however, hasn't had any impact on the price of diesel, which is what we will be producing.
Planning is important, but execution is a key aspect here, and there have been issues around execution of big projects. These are mega scale projects. Yes. How are you going about making sure that these projects can be executed in the way that you currently envisage?
I think first of all we have beefed up our own internal project management capability quite significantly. We have a team on the ground, and it's being staffed up as we speak, of the cream of the crop that Sasol has in terms of project management experience and capability. We will augment this with bringing in contractors to form an integrated project management team on a salt and pepper basis. And this team will have the systems, the experience, also the local experience of executing projects in the Gulf that will enable us to execute these projects as best we can. We are not, however, underestimating the challenge. These are enormous projects. They are going to be challenging, and we are competing with a number of other projects that are being done at the same time. We are therefore executing in a different way. We are choosing to proceed with a modularized construction strategy, so a lot more of the construction being done off-site, and then with the modules being ready to assemble, being brought on site and then put together there. And that will, we think, minimize congestion on the site and also improve constructability significantly.
And the milestone decision making and the phasing, can you take us through that?
We will probably take FID, final investment decision, on the cracker sometime during the first half of calendar 2014, and then on the 2 GTL plants about 18 to 24 months after that.
And in terms of the Capex profile of these projects, not the real money is not really being spent now, but at some stage you're going to see a lot of Capex going into the US. What does that Capex profile look like between now and the 2020 time frame?
We have an internal gearing target in Sasol of between 20 and 40% of our balance sheet in terms of debt to equity. So it's a pretty conservative gearing ratio that we aim to maintain also as we are executing these mega projects. The peak capital outflow will come in financial year 16 and 17, and we already have plans put in place to manage and mitigate that peak throughout that period of time. Part of that, of course, relates to the phasing of the GTL plants in order to smooth the Capex outflow as much as possible.
And what is your current thinking around the funding plan? You've already put your toe into the US bond market. How are you going to match your cash flow requirements on these projects with that funding plan?
At this point in time, we have a very conservatively geared balance sheet, only 6% gearing. So we are keeping our powder dry, first of all, with our available cash resources. I think the results that we've released today indicate that we have an amazingly strong cash generation capability in Sasol. So first of all, we'll leverage off that in order to make sure that we have enough capital resources available. Secondly, we will make use of a combination of different capital raising mechanisms, bonds being one of them. I think we were very pleased with the results of our first $1 billion bond issue, 3.47 times oversubscribed, so clearly highly sought after bond in spite of the sovereign debt downgrade that South Africa saw, so still very good corporate paper to go out and buy. And we think that we will be able to continue raising bonds in the market, obviously augmented then by internal resources and potentially also project financing.
And what do you think Sasol's going to look like post 2020 from a revenue, profitability and even a staffing perspective?
Clearly we will be a significantly different company to the one that we are today. We are going to invest approximately 2/3 of our total market capitalization, the total value of Sasol in North America, in these 3 projects. So the nature of the company will fundamentally change to being far more of an international nature than the one that it is today. However, given the fact that we have fully amortized, depreciated assets in South Africa, operating profit will still be far and away depends on the reliability and the delivery of our South African assets. So from a profitability point of view, South Africa will still remain core, but in terms of growth and the future leveraging off of the unique shale gas opportunity in the US, over time the US will assume a much greater prominence.
In terms of your personnel profile, your people?
Personnel profile will be changed quite significantly with recruitment of a number of additional US resources. We already today have a staff complement of just under 500 US employees working for us in our existing facility in Lake Charles. It's been performing exceptionally well in terms of reliability but also financial results. So we have a base there and we'll build off this base. This is not the expatriation opportunity for people to move to the US. We are going to recruit local US people, and they've got some of the best chemical engineers that I've come across in the world. So we're very excited about tapping into that labor market.
And finally, it's quite significant for Louisiana. You're going to be a big foreign direct investor there. How large are you going to be in that state, and how much support are you receiving?
We have had an exceptionally positive relationship with the state of Louisiana. Governor Bobby Jindal has been out to the Lake Charles site 3 times already. He has put in place a package of incentives that are really very important in enabling us to proceed with these projects. He's created a business-friendly environment in terms of speedy decision making, support, access to senior officials, support also in interactions with the federal government. So I think Louisiana has done a fantastic job in making it possible for us to invest there, and we're very confident about doing business in that environment.